Today I brought you a 5-minute scalping strategy that works on multiple timeframes and crypto assets since 2017. The strategy was made using the best performing entry signal indicator, the Chi Relative Index, which I presented earlier in this video. To come up with this strategy, I used our multi-entry signal premium TradingView script, which you can get access by becoming one of our Smart Trader tier member on Patreon. In today's video, I will show you how the automated strategy works, explaining every filter and option in a manual trading fashion. This way you can master the strategy after watching this video. Hello everyone, I am TradeSmart, let's get right into it. The strategy was originally optimized for the Bitcoin USDT 5-minute chart, as Binance introduced zero-fee trading for Bitcoin pairs and I wanted to take advantage of it. But as I finished the optimization and checked how it performs on other assets, I found out that the best results were achieved on the Ethereum USDT pair. So first, let's take a look on that. What we are looking for in a strategy's backtest results are steadily uptrending equity curve, a 100 of minimum total close trades, a drawdown less than 10% and a profit factor of 1.5 or more. After I added our script to the Ethereum USDT chart, first we can see the results of the last 2 months. Right out of the gate we can see that steadily uptrending equity curve, which is great. Besides that, we have 138 trades, which is decent. We also have a profit factor over 2, which is amazing, and a drawdown of 5.9%, which is under my max tolerance of 10%. Of course, the net profit is usually the most important factor for most of the people, which is in our case 79%. Still great, but let me ask you a question. Would you rather have a not so stable strategy with high net profit and hope not to lose all your profits in the following months? Or would you take a lower net profit but a more robust and stable strategy? I don't know about you, but I would go with the second option. So how do we know that the strategy is robust and has potential moving forward? To prove a strategy's stability and potential, we can apply the strategy on bigger set of candle data, on different timeframes and similar assets. For this purpose, recently TradingView had added a new function for those who have premium subscriptions, and that is the deep backtesting. With the deep backtesting function, we can go back many years in candle data and backtest our strategies on much bigger datasets. So let's activate this function and let TradingView backtest our optimization. Here you can see the results. We will talk about this in a minute, but first let's see when the very first trade occurred. If we switch to the list of trades tab and scroll down until the bottom, we can find the very first trade, which occurred on the 18th of August 2017. Back to the results. Well, I don't think you've seen anything like this before. Over the course of 5 years, after 4,100 trades, with a starting balance of only $1,000, the strategy would have made 234,180% gain on the account. Meaning, the $1,000 would have turned into over $2 million. But as I said earlier, this means nothing if the strategy is not stable and robust enough. So let's see the other factors of the strategy. First, looking at the equity curve, you can see an exponentially uptrending curve with some bigger drawdowns. The exponential nature of this curve is because we used 1% risk per trade, meaning on every new trade we would risk to lose 1% of our total account balance. This comes with bigger and bigger position sizing as the account grows. This is not the best equity curve, but it would pass for me. Here you can see another equity curve for the same strategy on the same asset and time frame. The only difference is that here I set the position sizing to cash based, so basically on every trade we would enter with a fixed dollar amount based position size. This way the exponential nature disappeared and we have a very nice steadily uptrending equity curve. But keep in mind this type of position sizing comes with relatively low net profits. Let's go back to the original equity curve. The next factor is the trade count, which is over 4,000, so no questions there. Then we have a 1.5 profit factor, which is okay. The drawdown is a bit high with 22%, but if we decrease the position sizing from 1% risk per trade to 0.5% risk per trade, the drawdown should be around 10%. Overall, these results are extraordinary, so what can potentially be the problem? As always, when using such low time frames, trading fees can make or break a strategy. But as I said, now with the newly introduced 0% trading fee for Bitcoin pairs on Binance can solve this problem. If you want to sign up to Binance and try out zero-fee spot trading for Bitcoin, feel free to use our affiliate link, which you can find down in the description. If you sign up using our referral link, you will get 10% discount on your trading fees. Finally, before I show you the full strategy, as I said earlier, the script optimization works on multiple assets and timeframes. So here are some other results on Bitcoin and Ethereum. Okay, are you ready for the rules of the strategy? If so, let's get right into it. Keep in mind this strategy is more complex than others, so pay close attention if you want to learn how to trade it. If you are not familiar with our multi-entry script and want to know more, check out the best entry signal indicator part 1 video. In this script you can use multiple entry signals simultaneously, so the strategy will only enter into a position if all the selected signals prints the same signal. As you can see, in this case I choose two entry signals, the chi-relative index and the squeeze momentum indicator, as these are amongst the most accurate entry signal indicators I found so far. To make them work together more smoothly, I set both of the indicators' length to 21. To make the indicators appear on your chart, open up the Indicators tab on TradingView and type in chi-relative index. Click on this one. Then type in squeeze momentum and click on this one. Now go into the chi-relative index settings and change its length to 21. Then what I recommend you do, but is optional, is to go into the style settings and change the line styles to columns. I like to do this with all of the line-based indicators, cause now it's much easier to spot a color switch. Now let's go to the squeeze momentum settings and change its length to also 21. Okay, so the strategy in its current state will enter into a long position when a color switch happens on both of the indicators on the same candle. For example, you can see an entry here. You might see the problem with this method. This way we will probably get very few trades. Besides that, as you can see, there are some pretty good entry signals just with a few candle differences. So to solve this problem in our multi-entry script, we have an entry signal tolerance. This function is very simple. Here we can set how many candle tolerance we allow for the entry signals to have between each other. Let's say, for example, I set the chi-res and the squeeze momentum's tolerance both to 3. Now if we take a look at the chart, here you can see that both of the entry signals gave an entry signal for a long position, just with 3 candle differences. But as I set the candle tolerance to 3, the strategy enters into a long position. I found the 12 candle tolerance to be the best with this optimization, so we are going to use that. Moving on, we will set up our stop loss levels. I found that the 8 length 2.5 times ATR gives pretty good results, so we are going with that. For that, open up the Indicators tab and type in NNFX ATR. Click on this one. Then go into its settings, change its X value, which is the ATR length, to 8, and the SL value, which is the stop loss, to 2.5. Then go into the style settings, untick the buy TP, sell TP, and the main ATR. Then change the line styles to step line. Now when we get a long entry signal, we will enter on the close of the signal candle and place our stop loss to the lower NNFX ATR line. This is going to be our global stop loss. But what will be our take profit? Well, we won't have a fixed take profit, instead we will use a trading stop loss. Here you can see the script setup for that. We will use the same ATR setup as with our starting stop loss, the only difference is that the stop loss will be updated on each candle. To replicate this in a manual trading way, open up the Indicators tab and type in Super Trend. Once you add it to your chart, go into its settings and change the ATR period to 8, the source to close, and the ATR multiplier to 2.5. Now we can use the Super Trend as our trading stop loss. For example, here you can see that the strategy enters into a long position. So from now on, whenever the price touches the Super Trend, we will exit that position. I have to mention that this Super Trend trading stop loss is not always correct, because sometimes it's still red when we enter into a long position, and vice versa. But this occurs very rarely, and this is the method closest to the one we use in our scripts. Moving on, we have the position setup section. We will allow long and short positions also, and we will use a risk percentage per trade position sizing. This means, for example, if I set this to 2% and we have $1,000 account balance, we will risk to lose $20 on the next trade. Our script calculates this position sizing automatically, but if you want to use the strategy manually, here is how you can do it. I made an Excel file which can calculate the correct position sizing for you. You can find the link to that Excel sheet down in the description. Once you open up that Excel file, you will need to input 3 parameters. First one is the current capital. This is the capital you have. Let's say in our case it's going to be $1,000. The next parameter is the risk per trade. This is the percentage of your capital that you are willing to risk on every single trade. I recommend this to never be over 3% for safety reasons. In this case I set it to 2%. And the last parameter is the percentage difference between entry level and stop loss level. To get this value, we have to go back to our chart. So let's say you spot an entry candle. Now you have to click on this measure icon and then click on the entry level. Then find the ATR stop loss, which is here, so click there. And now you will see the percentage difference between the entry and the stop loss level. Last step is to enter this percentage value into the Excel sheet and you will get the dollar amount you should enter into the trade with. Moving on, we arrive to the filters. Now there will be around 5 filters, so bear with me. The first filter we are going to use is a simple moving average or SMA. So open up the indicators tab and type in moving average. Add this one to your chart. Then go into its settings and set its length to 200. The rule is simple. We can only enter into a long position if the candle has closed above the 200 length EMA, and we can only enter into a short position if the candle closed under the 200 length EMA. Moving on, the next filter is the candle momentum oscillator. To get this one on your chart, type in candle momentum in the indicators tab and click on this one. Then type in EMA and click on moving average exponential. Now click on the EMA and start pulling it towards the candle indicator. Once it's there, release it. This way, the EMA will be displayed on the oscillator. Now double click on the EMA, set its length to 50, then click on its source and choose Candle from the drop-down menu. Finally, click on the style settings and change its colors to yellow. We need to adjust the candle too, so go into its settings and change its length to 50. The rules for this filter are the following. We can only enter into a long position if the momentum oscillator's line, so the blue line, is above the EMA line, so the yellow one. In case of a short entry is only valid if the blue line is under the yellow one. This filter confirms that we are entering into a position when the price movement's momentum is on our side. The third filter is the candle height in percentage limiter. So type into the indicators tab candle height and click on this one. Now let's modify its settings. First go into the style settings and get rid of the blue line. Then we are going to put 2 horizontal lines on the indicator. These lines will give us our high and low limits. The low limit level will be at 0.1, so find the horizontal line tool here and put it on the indicator and give it 0.1 value. The high limit will be at 1.3 level, so again click on the horizontal line and put it on the indicator, then give it a 1.3 value. I recommend you also change the colors of the lines to red. This way the lines will be more visible. The rule is very simple. We can only enter into any position if the column on the candle height indicator is between the 2 limit lines. Simple as that. The logic behind this indicator is the following. If the candle is too big and we get an entry signal on that specific candle, our risk to reward ratio will be very bad most likely, as these big one candle moves are usually followed by a retrace which can hit our stop loss very easily. Regarding the low limit, we also don't want to enter on candles that have a low height, as these candles usually occur when the price gets squeezed because of the balance of buyers and sellers. This usually comes with an unpredictable breakout either to the long or the short side. We only have a few filters left, so bear with me. The next one is an ADX limiter. To get this one on your chart, type in ADX in the indicators tab. Then click on this one. We need to change some settings, so double click it. Change the ADX smoothing to 5 and the DI length also to 5. Finally, we will need to add one horizontal line on this indicator also. That will be our low limit line. So click on the horizontal line tool, drop it on the ADX indicator and give it a 20 value. The ADX is indicating if the price is trending or is in a sideways period. That's why our rule for this filter is that we can only enter into any position if the ADX value is above the low limit level of 20. The next filter is the abnormal movement detector. This filter is designed to spot any abnormality in movement where there might be some kind of price level or order manipulation. Of course, we want to avoid trading when abnormal movement is present. For this filter, you will only need the measure tool. When you get an entry signal either long or short, you will have to measure the last 5 candles. Neither of those last 5 candles can be bigger than 0.8% from wick to wick. For example, here's an entry signal for long position. So let's measure the last 5 candles and see if they are smaller than 0.8%. The first one is okay. Second one, still good. Third, okay. Fourth, still okay. And the fifth is still smaller than 0.8%, so we are good to enter into this long position. And finally, we reach the last filter. This is the easiest one of all, we just have to avoid taking any trades on Saturdays, as on this day historically more losses are produced than wins. Now you know the full strategy, but to be sure, let's go over one long and one short example. First, let's search for a long position. Okay, this candle seems like a valid long entry signal. First, we can see that the squeeze momentum just turned green on this candle, and the Chi relative index turned green 2 candles ago. So we can say that it's well inside the 12 candle tolerance. The next step is to check all the other filters to see if they agree. First, we have the 200 moving average. As you can see, the signal candle closed above it, so we are good. Next up is the Chandomo. And as you can see, the momentum oscillator's blue line just broke above the yellow line, which is exactly what we need to see for a valid long entry. Next one is the candle height in percentage. It is hard to see if we are over the low limit level, but if you move your cursor around that area, you can see that we are well above it. Talking about the high limit, we can see that this column is clearly under it. So we are still good to go. Moving on, the ADX line needs to be above the low limit level of 20, and as you can see, it's well above. Next up is to check if the last 5 candle is lower than 0.8%. So take your measure tool and start measuring. The signal candle is okay. The second one is also good. The third one still good. The fourth still okay. And the fifth is also lower than 0.8%, so we are still good to go. And finally, this candle can't be on a Saturday. If you take a look at the bottom of the chart, you can see that the date is 24th of July, which is a Sunday, so no problem there either. All the criteria is met for a long entry, so let's set up a position. First, we are going to place our stop loss to the lower NFX ATR line. We won't have any take profits as we are exiting the position based on trailing stop loss. And if you remember, we added the super trend to be our trailing stop loss. So let's see where we will exit the position. Remember, we will exit the position when a candle touches the super trend. The super trend moves higher and higher slowly, and here we have a big red candle which obviously touched our trailing stop loss. So we exited the position right there. Now let's make the multi-entry premium script visible and see if we were correct. We got the signal candle right, and the strategy script entered on the open of the next candle, as it has to wait for the signal candle to close for making its calculations. We also put our stop loss at the right level, and the exit level is also correct. And now let's go over a short position and see what's the difference. Then, to close up this video, I will talk about some facts and expectations regarding this strategy. Here we have a candle that looks like a short entry. Let's see. First, we can see that the squeeze momentum just turned red and the Chi relative index turned red 2 candles ago. So far, it's a short entry. Now let's go over all of the indicators to confirm the entry. First, the price is under the 200 length moving average. Then we can see that the candle momentum line is slightly under the EMA line, so the setup is still valid. The candle height column is definitely between the 0.1 and 1.3 level, and the ADX line is above the 20 low limit level. Now we have to check if the last 5 candles height is lower than 0.8% or not. So let's measure them. The signal candle is okay. The second one is still good. Third, okay. Fourth, okay. And the fifth is also okay. By the way, there's an easier way to check the last 5 candles height. The way to do that is to take a look at the candle height in percentage indicator and check if the columns of the last 5 candle is under the 0.8 level. Finally, let's see if the signal candle is on a Saturday or not. The date is 26th of July, which is a Tuesday, so it's a valid entry. All indicators agree, so we can set up our short entry. Entry level is the close of the signal candle, stop loss goes to the NFX ATR level, and we won't have a fixed take profit level, as we will exit when the price touches the super trend. The super trend moves lower and lower as new candle sprints, and the price touches the super trend right on this candle. So we'll close the position right here. Let's see if we were correct. Now I make the multi-entry premium script visible, and as you can see, we spotted the short entry signal candle correctly. The strategy entered into a short position right on the next candle's open. The stop loss placement was also correct, and we got the exit level also right. Strategies like this needs a lot of monitoring and calculation. Trading a strategy like this manually is very time consuming and we have a lot of room for errors. That's why we decided to create TradingView trading scripts which do all the work automatically for us. And the best part is that we can connect these premium scripts to automated trading softwares like 3 or Wonderbit, which makes it possible to have a fully automated trading bot which does all the work for us. So if you want to try out our trading scripts, tools and optimizations, become one of our Smart Trader tier members on Patreon today. Finally, let's take a quick look at some trades and let me give you my thoughts on this strategy and what I expect. So for example purposes, let's say we are using a 1% risk per trade on the example trades. So on the first example, we can see that the trade was a winner with a 1 to 1.43 risk to reward ratio. Meaning, with using a 1% risk per trade, the strategy would have made 1.43% gain on the account. As we use a trading stop loss, the max limit for risk to reward ratio is technically unlimited. So in case of a very strong trending move, you can achieve even a 1 to 5 risk to reward ratio. Strategies with trading stop losses have the ability to ride these rapid strong moves. The second trade is another winning one with a 1 to 1.1 risk to reward ratio. The third and the fourth one are losses with a 1% loss on the account each. The fifth is a 1.33% win. And here comes the sixth trade, which shows the other great ability of a trading stop loss. As you can see, on this losing trade, we did not lose 1%, we only lost 0.36% as the trading stop loss first moved into the trade's direction, then it got hit. That's why usually on average the winners are bigger than the losers, because the trading stop loss lets the winners ride and cuts the losses quickly. This is one of the most basic trade management methods that can improve your trading results tremendously. Although I have to mention that this trade management usually comes with much more losing trades in a row than winning trades, but the trades that are winners usually recover most of the losses, if not more. That's why with this strategy you have to be prepared for losing streaks. Moving on, I want to talk about the trade frequency. So as we are using a 5-minute chart, trades occur quite frequently, I would say around 1 to 3 trades per day on average. You also have to keep in mind to calculate with fees, especially if you are using such a low time frame and you don't have a zero-fee trading broker. And finally, I have to mention, as always, historical results does not guarantee future results. This and none of my videos are financial advice, and I am not a financial advisor. Aside from that, having such great results since 2017 is promising for me. I'm really excited to see the upcoming trades on this strategy. And that wraps up today's video. If you like this one, don't forget to drop a like, subscribe, and hit the notification bell so you won't miss any of my upcoming videos. As always, thank you all for watching, have an amazing day, and see you in the next video.